Welcome to our deep dive into the world of crypto. Today, we're doing some serious investment research because the market was just hit by a sudden, pretty brutal price crash that sent some major shockwaves everywhere. We're going to dig into the data, unpack the expert analysis, and try to answer that one massive question on everyone's mind. Is this it? Is this the end of the line for Bitcoin's bull run?
So let's just get right to it. This was the number. This is what greeted traders on the morning of November 20th. I mean, just imagine waking up to this. After holding pretty steady above 90,000, the price just fell off a cliff. It plunged all the way down to $86,610. It was a sharp, decisive move that, frankly, caught a lot of people off guard and just instantly soured the mood across the entire market.
And you know, this isn't just a vibe, it's not just a feeling, it's actually a measurable metric. There's this thing called the Bitcoin Fear and Greed Index, and it tracks the sentiment, the emotion of the market. Right now, it has absolutely cratered into extreme fear, and that tells us something really important. The emotion driving the bus right now isn't rational analysis, it's just widespread panic. Investors are selling, and fear is firmly in the driver's seat.
Okay, so just how bad was this crash really? Let's get into the weeds here and break down the data to get a real handle on the immediate impact of this thing.
Now, I know what you might be thinking. A 1% drop? What's the big deal? But here's the thing. That 1% was enough to shove Bitcoin down to a new 7-month low, basically erasing months and months of gains. The global market cap fell down to 1.78 trillion. But look at that last number. That's the key. The trading volume, 87 times billion dollars in just 24 hours. That is a massive, massive amount of Bitcoin changing hands. And it signals one thing loud and clear: panic selling.
Right, but here's where the story gets really interesting. This crash, it didn't happen in a vacuum. And what's really got analysts scratching their heads is that it's all happening against this backdrop of really confusing and contradictory information. It's like there are these incredibly powerful forces pulling the market in opposite directions all at the same time. And that really gets us to the central paradox of this whole situation. I mean, think about it. Risk assets, like Bitcoin, they usually do really well when the broader economy looks strong and healthy. But right now, we're seeing some pretty good news in the wider market, yet Bitcoin is just falling hard. So what is going on here? Let's try to sift through the same clues that the analysts are looking at. You can literally see the market's tug of war right here on this slide. So on the one side, you've got this really bullish news from the wider economy. The chipmaker NVIDIA just reported massive revenues. The US jobs report, way stronger than anyone expected. Now, normally, this kind of stuff boosts investor confidence across the board. But then on the other side, you've got these crypto-specific problems creating a huge headwind. A staggering $3 billion was pulled out of Bitcoin ETFs in just 1 month. You pair that with the extreme fear we just talked about, and it really seems like crypto's internal problems are just overpowering all the good news from the outside world right now.
So, with such a confusing picture, what do you do? Well, a lot of analysts turn to the price chart itself for clues. This is what's called technical analysis, and you can think of it like reading a map of market psychology. You're trying to predict where the price might go based on these key levels where people have historically been buying and selling. So out of everything we've talked about, this might be the most crucial point. For weeks, analysts saw the $96,000 mark as this critical floor, a support level. Think of it like a floor in a building. It's a price zone where buyers had consistently stepped in, over and over, to stop the price from falling any further. But this week, that floor broke. And when a major support level like that is lost, it sends a really powerful signal. It basically says the sellers have completely overwhelmed the buyers and the entire dynamic of the market has just shifted. Okay, so with that old floor at 96 grand totally gone, analysts have identified a brand new battlefield. The next potential safety net or support level is down between $83,000 and $84,000. If that doesn't hold, well, the last major line of defense is way down in that $69,000 to $72,000 range. Now, on the flip side, if the price even tries to recover, it's going to run smack into this massive resistance ceiling between $106,000 and $109,000, where a whole lot of sellers are likely just waiting to push it back down. All right, we've looked at the crash itself, we've untangled the confusing economic signals, and we've mapped out the new technical battleground. So now we get to the bottom line. After weighing all this evidence from our source material, what's the final verdict from the market analysts? The conclusion couldn't be clearer. This quote from Bitcoin Magazine really says it all. Bears appeared firmly in control, and any upside was likely to encounter heavy resistance. Now, what does that mean in plain English? The sellers, the bears, are totally dominating the market. Any attempt by the buyers, the bulls, to push that price up is probably going to be met with an overwhelming wall of selling pressure.
So let's really break down this bearish outlook. First off, the price is already down over 25% from where it was in October. That's a huge drop. According to this analysis, the best case scenario for the bulls right now isn't some new rally, it's just a temporary bounce, a little short-lived rally up to that resistance ceiling around 106,000 before it probably falls to even newer lows. For a real sustained recovery to even be on the table, the price would need to somehow punch through that massive barrier at $116,000. And until that happens, well, hope for the bulls is seen as pretty minimal.
And all of that leaves us with one final and I think crucial question. The outlook, yeah, it's undoubtedly grim right now. The sellers are calling the shots. But markets are dynamic. They're always changing, and sentiment can flip on a dime. So while the situation looks really bearish today, the critical question becomes what signal, whether it's a piece of news or a specific price move on the chart, what signal would be powerful enough to finally break the bear's control and shift this moment? Welcome to our deep dive into the world of crypto. Today, we're doing some serious investment research because the market was just hit by a sudden, pretty brutal price crash that sent some major shockwaves everywhere. We're going to dig into the data, unpack the expert analysis, and try to answer that one massive question on everyone's mind. Is this it? Is this the end of the line for Bitcoin's bull run?
So let's just get right to it. This was the number. This is what greeted traders on the morning of November 20th. I mean, just imagine waking up to this. After holding pretty steady above 90,000, the price just fell off a cliff. It plunged all the way down to $86,610. It was a sharp, decisive move that frankly caught a lot of people off guard and just instantly soured the mood across the entire market. And you know, this isn't just a vibe, it's not just a feeling, it's actually a measurable metric. There's this thing called the Bitcoin Fear and Greed Index, and it tracks the sentiment, the emotion of the market.